Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock with news of more momentum in this commodity supercycle. But first, the US reported a big drop in jobless claims for last week, reinforcing the recovery in their labour market. In fact, the latest data suggests normal pre-pandemic claims levels are now in sight. And announced layoffs and job cuts fell in April to their lowest level in more than 20 years. In Canada, home prices could climb 14% this year as low rates slow demand, their housing market regulator said. But today, it's really all about commodity prices. Increasing optimism over the global economic recovery has pushed all higher. Government stimulus measures and rising investment is doing the job. However, supply-side issues are also contributing to market tightness. For copper, the transition to sustainable energy networks has powered its price to over $10,000 a tonne. Iron ore prices rose sharply again yesterday despite, or maybe because of, rising political tensions between China and Australia, and coal prices are shooting up too on rising steel demand. And global food prices shot up again in April. Output is up in most places, but sharply rising demand, especially out of China, is keeping stocks low and prices high. Meat and dairy prices are part of this global trend, but the big gains are for soy, canola and palm oil, again mostly based on Chinese demand. You can see the consequences in the Brazilian and Borneo rainforests, however. China's frustration with Australia boiled over yesterday, and Beijing announced it will stop talking to Canberra. In a notice on an official website, Beijing has applied an indefinite suspension to all activities under the China-Australia Strategic Economic Dialogue mechanism. However, it's largely a symbolic move, and one that underlies China's weakness in being able to respond in a way that really hurts Australia without hurting itself more. The same issues are holding up the EU from ratifying its big investment agreement with China. And the Chinese are frustrated with that delay too. And now China has expressed anger at New Zealand for the unanimous parliamentary condemnation of how China are re-educating their Uyghur minority. But given this was a statement from the Wellington Embassy rather than from Beijing directly, the trade consequences may be mild for us. The US Treasury 10-year yield starts today at 1.56% and down 2 basis points overnight. And the price of gold starts today at $1,815 an ounce. And that's up $30 since this time yesterday. And that's highest since mid-February. And oil prices are down 50 cents today at just on $65 a barrel in the US, while the international Brent price is just on $68 a barrel. And the Kiwi dollar opens today at 72.3 US cents and firmer again since this time yesterday. Against the Australian dollar, we're at 93 Australian cents, and against the euro, we're at 60 euro cents. That means our trade weight index is still at 74.1. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.